Okay, hi guys, I'm back. It's going to be solo, me alone today, talking about my favorite stock Enphase as it goes in the toilet. So, anyone who's been watching this knows that I love this company. I think they're going to do wonderful. And in fact, I've been just buying it all the way down. And today I'm sort of sad because as you can see, it is up today. And it was up yesterday. It sort of bounced real hard over off of 138 or so. Let's go over some of these facts. Enphase is $148.96 today. It is a forward PE of 65. So this is important. Let's remember that. Market cap is under 20 billion. Now, this is what I keep going back to, that short term is 65 forward overvalued in this environment. It honestly could be. Can we be cut in half with our forward PE? Yeah, there's nothing to stop it from being cut in half, which means Enphase would be at $80, let's say. Does that sound scary to me? I mean, I'm not planning to sell it till it's like around 1,000. So is $80 scary? I just find it's an opportunity to buy more. But having said that, nobody wants to see their portfolio drop, including me, obviously. But if it happens, you just have to be prepared that you have some soldiers on the side to buy some stocks that you love. In this case, for me, it's Enphase. Look, I think we have a $100 billion company in the going I don't know when. I'm going to do some projections in this episode. I'm going to show you what I think will happen. But honestly, none of us knows when it'll actually happen because there's a lot of macro factors at play. What if they can't just scale because it's hard to get chips? What if the incentives aren't there for solar and it slows it down by a year or two? But let's just face facts. Solar is not going away. Companies like Enphase and SolarEdge are just going to crush it for the next 20 years, 30 years. I mean, like, this is like one of those generational plays that I'm in. I don't think this is like I'm in some spec stock and I'm hoping for it to succeed. This is like the future of energy is solar and wind. Okay, let's face this. Anyone who doesn't believe this, then I don't know why you're investing in this, because honestly, you don't get it and you shouldn't be in it because you're not going to be able to stand the volatiles ups and downs. And that's another reason, just for traders out there, that I do have a small portion that I do call options on and I trade. So when Enphase ran up, I didn't catch the 280, but I caught the 240. I had my call option from 130, which was around this price last time, all the way to 230. So there is basically money to be made both ways. But having said that, I'm a long-term investor, so let's talk about the long-term on Enphase. Chart is fascinating. I feel like we've broken out of our main trend, and I'm going to go over it because I know I've shown this a million times, but there's got to be at least one person out there who hasn't seen this chart. All right, the chart of Enphase from 2017 to almost currently today, a few months ago, has been in this bull trend, between these blue lines going straight up. I feel like we might have exited that bull trend. And especially with growth selling off, I mean, it wasn't going to stay in there, obviously. So we could be out permanently, which we don't know yet. That's not a guarantee. But if we are, then maybe we're in a different trend now that it's a little bit more of a mature company. Back here it was a much smaller company. We're talking about single digit billions. Up here, we're in the 20 billion to 40 billion range. 20 to 40 is a big difference from like the $2 billion range. So this is a more mature company, which basically means we might not be going in this blue uptrend. And so the crazy price predictions that happen from this blue uptrend, for example, 2023, you're basically talking about a $2,000 stock. And I don't even think that's going to happen. That's like some crazy stuff has to happen. This is a manufacturing company. They're manufacturing actual real products. It's hard to have that kind of a growth all the way up there. But having said that, let's take a look at the current growth if this does stay in this trajectory in the chart. So I feel like we're in between these two red lines. Let's project out a little bit, somewhere in the center here. That's what I have this purple line here, that we are at 288, which is also our peak, basically 2023 again. So this is sort of moving up. Maybe not as fast as it was moving up before in the blue channel, but now in the red channel, it's moving up. We expect roughly $280 by 2023. And if we extrapolate a little bit further, let's say somewhere around here, $380 or so, somewhere in the middle of this channel, this red channel, that it'll be around $380, $350, 2 years out in 2024. Having said that, some people think, I need a 10X and everything in 2 years. Well, you missed your 10X. You should have bought this in 2019, or 2020 even. Even I was buying it at $20. So we did have our 10X, but you can't expect 10X after 10X after 10X in the same time window. So I think our time window is getting a little bit extended here because it's a bigger company now and everybody knows it's not going anywhere. And now everybody's looking at the metrics of PE, how much they're actually growing and things like that. So that's actually becoming very important because now they have profits. They're not like they were before, an unprofitable company that you were speculating on. There's nothing to speculate on here. Solar is winning. Wind energy is winning. Not only Enphase, but SolarEdge is a great business to invest in. It's also down. And this is where I was buying pretty heavy all the way down here, especially yesterday. I wish I bought more, of course, because it was a clear sign to buy, at least in this channel. Can we break this channel? Absolutely, 100% we can break it. Like I said, the forward PE is 65. Can we go in half to 30 or 40? Possible, okay? Do I think it's likely? I don't think anyone's going to let it get that far under 100, but who knows? That's my prediction. It's not going under 100, but don't shoot the messenger. I just think it's an opportunity to buy that if it does actually fall that low. And if Powell comes up with 4 increases in rates or 5, who knows what happens? Stocks like this are going to get hit. It's obvious. Is that a bad thing? To me, it's not a bad thing because I've been moving my speculative stuff into this company, like literally transferring a lot of wealth that I've created in other stocks over to this stock because I believe so heavy in the future of this one. I just feel it's an easy double, triple, quadruple of my money. It's like I don't have to worry about this one. I could sleep at night. That's important for me. Some people want the Doge coins. I want more Enphase. Let's put it this way. Back to the chart. Charts are important. And people think I'm not a fundamental investor. I'm investing for Enphase for fundamental reasons. Having said that, let's look at the actual technicals too, because they're important when you invest. I'm going to go to the daily now. I know there's a lot of lines, so please bear with me. Don't get confused. Let me make it a little smaller. Okay. Here's our channel that I think we're in, this red channel. Ignore some of these other lines. I know it's a little bit confusing. Maybe I should clean it up one day, but I like to keep it there to know where I have my support and resistance. We're underneath the 21-day, the 50, and the 200-day. So technically in bearish territory. For Enphase, in its whole history, that anytime you bought it under the 200-day, it's been a good buy. We are clearly under the 200-day. In fact, we are extremely under the 300-day. So I'm going to give you one scenario where this might be worrying. To me, it's not, but I'm going to give you a possibility. It has gone under the 300-day briefly. I don't know if it's ever been this deep under the 300-day, but if it's in this channel and it holds this channel, that shows that we should probably continue on our merry way slowly, sort of up. I think yesterday or 2 days ago, we were actually very close to the bottom of touching this. And unfortunately, I had my bigger buy at 135. And I did buy some, though, when I just saw it go to like 138, 139. So I did catch some of this, but I had a much bigger buy at 135, which I didn't get. And this is one of the problems of trying to time an exact number, that you are not always going to get an exact number. That's why I have been buying, especially harder under the 200-day, just because you never know when the market will turn. Even if it goes further down, to me, this is always a good opportunity to pick up a quality company. And a lot of quality companies that go under the 200-day, almost any of them, Apple, Microsoft, name your pick, NVIDIA, Google, if they're around the 200-day even, a lot of times that's probably a good time to pick it up, unless there's something catastrophic happening in the company. So nothing catastrophic is happening for Enphase besides traders speculating. And so it's getting overheated, it's getting oversold, getting overheated, getting oversold. Very volatile stock. But let me point out, look where we are. We're still next to the bottom of this. We're under the 200-day. We're under the 300-day. The RSI has been completely devastated. Check out the RSI. We went as far down as almost 20. Now, let's look at the history of this company. How many times in its history has it been that low? It's not often. Last time we were at 20 was here, and that was 2017. This company seems oversold because in 2017, I think they were on the verge of bankruptcy or something like that. They weren't doing so well. And here's the other one, 2016, that you're talking about a different company currently completely oversold that is profitable. That's forward PE is 60, growing this year it grew at 75%. So we'll have a couple of cases I show you, but it just seems like any money I put in at these prices, I'm going to easily return my money, that I will not lose in the long term. That's what I'm saying. And this is for me. This is my financial advice. It's not financial advice for you. I want you to do your own research on this. I've done plenty of research. I am very comfortable, and I keep looking at the same things over and over just to maybe just feel better about a stock dropping, because when it drops, you have to look at it again and see if you're doing the right thing, obviously. And you know what? Everything says that I am doing the right thing. I do not sleep poorly at night, knowing that I just lost from 280 to 130, that value in between. I don't sleep poorly. I just see it as an opportunity to get more Enphase and to get rid of things I never really fully believed in. Even if I'm down on those things, that's why you take that loss, you tax loss harvest. People have been doing it, especially this December. You do that, you get some loss, sucks, but you're putting it into a quality company. And that's just a better way to invest. You just don't have to keep all your losers. If you really don't believe in something, I honestly see no reason to keep it. This is a good time to show you that we have a Discord, and we've been talking a lot about Enphase, by the way, posting articles here, just different things about solar, even SolarEdge. All the charts that I'm showing you I try to do at least a couple a day on different companies right here on the Discord. So check out the Discord. It is totally free to join this main part. We do have a Patreon now. Of course, we want you to join that, but you don't have to. This is the free part. Check it out. Obviously, we're talking about FUV. I got a chart right now on FUV. I'm not going to go into it, but you can go take a look at that. Square is something I've been buying very heavy, and we've been discussing it. LG's been also hooking us up, and he's talking in our channel, and other people are joining us slowly. So nice shout out to everybody who's joining us. I think someone new joined us called Lifekess. Lifekess. Okay. Nice to see you, Lifekess. Post something, say hello. Check out the Discord because we've got a lot of stuff we're posting on, and Salesforce, another company we're watching. So if you guys are interested in the stocks we're tracking, we're trying to track quality companies. Obviously, we have our speculative plays, but we're trying to track quality companies, and you should join us. I'm just going to reiterate that we are under the 200-day for Enphase. We are under the 300-day for Enphase. We are touching the bottom of this channel for Enphase, and the RSI is in the toilet for Enphase. So you have a choice now. Do some of your own homework. Take a look at this, and you can see if it's worth investing in. Okay, so my next thing, revenue growth. Now, I'm going to give you the bear case, the middle of the line case, and more of a bullish case. And I'm not even doing a super uber duper bull case. I don't think I am, but you'll see it is kind of bullish. So the first one is my bear case, and that's if like things don't go according to the way I plan. Okay, let's see where they go. Last 2021, they're growing approximately 77%. And I want to point out this number that you're going to see this in the earnings. For the investor call that Enphase had, they said they made 1.37 billion. Okay, so I put this number here. I don't see analysts saying this number, or maybe you can point me in our Discord if someone did, but I think they think it's 1.2 something, like 1.25. There might be a beat on this, and there might be an EPS beat on this Q4 happening. No guarantees, but I think they might be slightly beating by maybe 100 million, somewhere around there, the Q4 numbers coming up in March. If that happens, I don't know, it's a positive thing for the stock, I would think. Even if growth is selling off, but Enphase is growing faster and beating EPS, could be positive. Just pointing that out. Okay, so 77% growth over the last year. It's been sporadic, by the way, but this is why I say we're at the beginning of an S curve. We're not in the middle of an S curve. We're not at the end of an S curve. We're at the beginning of an S curve. So if you believe anything about growth, and even some of what Kathy Wood is saying, I heard stocks tank, this might be one of the things she's missing. I feel that it's not in her portfolio, although she added it to her new transparency portfolio, but it's not the same in her RK. So she should be adding this to her RK, but she's not. I think one day she will, by the way. That's my another prediction I'm making. Okay, so 2022, my bear case, 40%, and all the way down, I'm expecting 40% growth. And the only reason I'm saying this is my bear case because they've already said roughly they're growing like that. They've already said it multiple times. I'm going to say, let's say they just keep growing at 40%, at least until 2025. Very reasonable, assuming that we are in an S curve on solar. I don't think I'm being out of the ballpark here, that thinking that if Tesla can make and grow 88% in terms of car manufacturing, that maybe Enphase can sell little tiny microinverters and batteries, for your house. So I think this is my bear case. So let's go over the numbers here. I want to show you what you can make, because that's the whole point, right? What are we going to make? So my bear case is that the price of sales is going from currently it's around 16, 17, that it's going to go next year to 15, then all the way down to 8 by 2025. This could be a realistic bear case, meaning that this is what happens. It's a growth company, but it's being priced lower and lower in terms of the price of sales. So having said that, what does that mean here? Share price goes from 2022 of 211 to 2025 of $302. And the percent increase here, basically by 2025, here you go. Just want to be clear on this. This is where we're at. By 2025, we have made 203% on our money, assuming today's stock price of $149 or so. Now, for a lot of people, they might be, this is not a 10X anymore. You shouldn't be in the stock because this is a realistic number. You got to get out, because if you're not comfortable with a 200% return in the next 4 years, then you really shouldn't be in it, because, you know, you can go speculate on something else. To me, this is my bear case, and I'm okay with a 200% return to feel good and sleep at night, because I don't want 90% of my portfolio in stocks that are, let me put it, that can 10X, but can also go basically 80% down. Okay. I don't want to do that. So you have to decide what you guys want to do. Now, let me go to the middle of the road case, sort of the rational bull case. What happens to Enphase? This is coming from some of the history that Enphase already spoke about. I think next year, they're probably going to grow around 70%, maybe even 100%. I didn't want to say this for the rational bull case, but let's say 70%. The reason I say that is because they've doubled their microinverter production. They've said in Q3 that we're going from, I think, 2.5 million microinverters to 5 million microinverters. And you can look it up in their earnings call transcript. I'll try to have a link down there. If they do that and their capacity is going double, maybe they don't produce their full capacity, but can they grow by 70%? You know, that is possible. So this is my rational bull case, where I think they might be growing at these higher multiples, not 40%, but more like 70. And I'm taking it all the way down to 40 by 2025. I'm giving a rational version while in my brain, by the way. I just want to make it clear, because some people notice that I'm pretty bullish. This chart is going vertical. These are projections, of course, 2022. These are all projections. But if this chart goes vertical, even by a little bit more than I am predicting, I mean, these numbers become astronomical. The reason I want to keep it in line is in check, let me put it this way, is because, look, they're manufacturing real things. So it's hard to like manufacture real things. It's very hard. And then double your production outputs year over year. So I don't know if that's going to happen. It's going to be some years that are off, some years that are on. Let's say I'm assuming this sort of growth next year is a little bit bigger, and then it sort of drops off by 2025 to 40%. While in the back of my mind, I'm thinking, you know, maybe they can sustain, and I'll show you the bullish case. Maybe they can sustain 70%, maybe. Okay, so let's look at the prices and the price to sales. This is important. So the other thing I'm going to do with this, by the way, I'm going to take this whole chart and I'm going to upload it to our Discord here. I'm going to make it public. Usually it's private for the Patreons, that kind of stuff, but I'm going to make it public. You can go join us and you can download it and put your own numbers in. So it's going to be here in the actual public Enphase Discord. I'm going to drop it right in here, and you can download it anytime you want. Maybe have a conversation with me. Tell me where I'm wrong, or put your own numbers in and take a screenshot and show me. All right, so price to sales, I'm still assuming, even in my rational bull case, I still am saying the price of sales will go down. A lot of people might disagree here, okay, because it doesn't have to go down the way I'm saying it. I just want to be a little bit more realistic, even in the rational version. So here's the stock price now. Stock price goes from 256 to 450 now. Remember, we're at 147. And so by 2025, to end the year 2025, I expect a 302% increase. And let me tell you why this is sort of a little bit accurate. I'm going to go back to my chart, and you look at the monthly, and let's say we do stay in this channel, and you go out to 2025. Remember, I didn't plan the two to coincide. I literally just worked out the numbers in terms of growth. And this is what happens, that at around 2025, they should be somewhere in the 400s. So 472, it's saying here, is like the middle of this channel, roughly. Like if this continues in the middle of the channel and they're averaging around there, 470 is approximately the middle. So if I go back now to my Excel spreadsheet, the numbers spreadsheet, you basically see that we are at 450, very reasonable for even what the chart is saying, 300% upside, 10,000 becomes 30,000, 100,000 becomes 300,000. So it really depends what you can put in. So if you're looking for a 10X, once again, sorry, I don't think the 10X is going to happen in the 4 years. That's what I'm saying. We're not talking about 2030 here. I don't even want to go into those numbers. Enphase is in the thousands probably. But in terms of the 2025 numbers, 4 years from now, is a 3X good enough for you? If it's not, bye-bye. You really shouldn't be buying Enphase. Okay, so now the irrational bull case, maybe things go incredibly well, and this is what happens. So I'm assuming just 75% growth straight through. And maybe some years it's 100%. Like if they can double their capacity, this is engineering, so it's still hard. But I'm just saying, what if? What if this happens? What if they have 75% growth? Okay. What happens to the price of sales? I'm still tanking it, but I stop at 10 now because they're growing so big. Honestly, even 10 is ridiculous for a company growing that fast. It might be higher, but let's just say that's what it is. Now we have the share price between 200 next year, $264, 2022. Great return by itself. It's almost a double, right? To $924 by 2025. Interesting, right? Once again, this is not my middle case, which above was 450. You can see the 450 right here, a 300% return. This one is $924 by 2025, 620% return. 10,000 becomes 60,000, 100,000 becomes $600,000. And honestly, at that point, people's lives change completely because 100 grand is a lot, but 600,000 is a whole new ball game. And if you have 200,000, that's 1.2 million. Look, I know not everybody has that kind of money. I get it, but it's not like it's happening tomorrow. The whole point is that if you believe in any company, not necessarily Enphase, that you are dollar cost averaging as much as you can without putting yourself at risk into companies of high quality that are growing very fast. Tesla being one of them, Enphase being another. I'll have another episode, but Square and PayPal, these companies are pretty much heavy growers and they're being discounted today. So you have a chance today to buy them. And that's up to you how you choose to play this. I am not running away from these companies. I am going heavier and heavier into them. And I don't like to see my portfolio bleed, but if my simple math here works out in any form, even if I'm off a little bit, I don't know. I think I'm going to be happy. I just don't think I'm going to be too upset in like 2025 when this all plays itself out. Once again, I'll upload this to our Discord, so it'll be available. I'll put a link down there. I don't know if I could put a link up here, but I'll put a link down there to the Discord where you guys can check out the Enphase stuff and download it, put your own numbers in, let us know if you agree or not. As I update it, I will update it on the Discord so everybody gets to see what I think is happening with Enphase. All right, now that we've got the numbers thing covered, Enphase Energy downgraded at Bank of America ahead of critical transition. What I find funny about this is that this was downgraded not when Enphase hit $280, which is the right time to downgrade it because it was completely parabolic territory and overbought 100% and it needed a correction. So this guy comes out basically when it's under 200, maybe it's 180, 190 bucks, and he downgrades it. Well, he puts it on a hold. Why do a downgrade from buy to neutral, right? Bank of America downgrades shares to neutral from a buy with 187 price target. Why do it at that price and not do it at the $280 price, which was crazy? So it seems like he's following more of what's happening with the actual stock as opposed to what's happening with the company. And I don't like these types of analysts. And if you look at his history, he wouldn't be the guy I follow 100%. Let me put it this way. Having said that, on SEDG, he has a buy, a 16.69% upside, okay, for SolarEdge. And that's a buy, okay? For Enphase, it's a hold still, and it's a 25% upside. I mean, a part of me is like, are you tanking it in order to buy more shares? Some of this doesn't make any sense because if you're going to do the same thing with SolarEdge, shouldn't this be a hold? Similar companies, in a similar business. I don't know. I would say both are a buy, by the way. I want to get more. I want to get any SolarEdge. I have no SolarEdge, so I do want to buy SolarEdge. But how can this be a hold and this be a buy? Especially with Enphase having better margins and having more cash on their books. So there's all these other things we can talk about in another episode. I keep promising, but the reason I'm in Enphase is not only because the tech is just so superior, also because they just have better financials if you look at it. Okay, having said that, the last thing, I don't really follow these numbers at all. These are not my price targets, but this one is the 12 months ending is 260. And just to take a look, where was I in the middle case? I'm at 256.93. So it's actually not too far from this middle case. Here you go, 259.56 is the upside. But look at this, even within a year, everybody's really averaging at around 72% upside. Where's the down? I don't know. Like, is the downside to 100 and then it goes to 270 or 250? Is the downside to 80 and then it goes to 260? I don't know. I'm just going to keep buying it on the way down. And today I'm sad it went up. Makes no sense for me. I want it to go down. People should sell this. It's no good. That was it for the investor portion. I do have another part where I just want to say, what are we investing in? I just want to show people what are they buying when they invest in Enphase. This is really, you're buying their technology. They have these microinverters that go underneath solar panels. These are the IQ7s, and they are $135 each. And remember, so if you have 10 panels, it adds up. This is why SolarEdge still has a business. So if you have 10 panels and you do this, 135, It's $13.50 just for the inverters, not counting the panels and anything else, electrician and all of that. It's just these microinverters. The IQ8s, which are currently out, the IQ8s do their own software grid. That means you can have battery backup, quote unquote, battery backup while the sun is out, but you don't have a battery. So you actually can be producing energy, feeding your house. And currently, all these systems don't work that way. Your house will shut down because you can't be tied to the grid when the grid is out. That means your solar stops production. These IQ8s make it so you can have energy during the day, even when the grid is out. You still need a battery if you want it at night, though, so that doesn't change. Okay, but basically, the IQ series pledges to change that with its new sunlight backup capabilities. If the grid goes down, IQ8 systems can provide limited and conditional home backup by pulling electricity straight from the solar array. These are very clear limitations, namely that the backup power is only available when the sun is out, hence the name sunlight backup. But given that it gives homeowners access to at least some backup power without spending a cent on batteries, the IQ8s are likely to be a very appealing choice for homeowners looking to go solar. And I would have done this if I had this opportunity because, yes, sometimes the power goes out and my generator kicks in and I have a separate old generator. I don't have modern batteries yet, but it would be nice if the IQ8s powered my house until I needed to use that energy from the generator, which I don't want to use because that costs me money. It's cheaper to, if you already have solar, let the solar keep charging your house. It's literally free energy at some point because once it's paid off, it's free energy. And the IQ8 Pluses are $176. I have 51 microinverters on my roof. It would be a significant price difference where you would have to think about, several $1,000s here and there you got to think about. I want to show you what is the big deal because why is SolarEdge, why are people considering these two like the same? Why isn't everybody buying Enphase microinverters? They're better. They're technologically better, okay? And that's because they're more expensive, at least on the sticker shock of it might seem more expensive. So you go to the SolarEdge and they're roughly, there's different prices, but let's say it's $75 and you're talking about an IQ8 being $155. So it's almost double more expensive to get an IQ8 than it is to get one of these SolarEdge power optimizers. I'm not going to go into the technology of it. You guys can look it up in our other videos. We had long discussions. And in fact, we have a video coming up that we're shooting Friday with an actual solar installer. And we'll go into all the actual technical details about microinverters and optimizers and ask him a bunch of questions that just relate to that. And he installs these things. So we'll go into depth on that thing. But just know that the microinverters are better for you long-term, just for system upgradability. And in terms of having a decentralized grid almost on your roof, because every single inverter controls what happens to the power that goes to your house. They're not all tied together like these optimizers, which then you think you're saving money, but then you have to buy a giant inverter hub, a central place like this guy that costs 2, 3, 4, 5,000. It really depends what you need for energy. And all of these inverters go in there. And what happens is this box eventually fails and your whole system totally goes down, okay? So anybody who understands the technology, which a lot of people don't, will say, well, this is a couple thousand cheaper possibly than the microinverters. And it's not. Eventually, you're going to be paying in a whole different way. You just won't realize it because these inverters usually last 7 to 10 years. The microinverters last 25 years, or at least they're warranted to. So there's a bunch of these things, and we'll get into a whole discussion with our podcast on Friday, Saturday that we're having with our installer, and we'll include a link at some point. We'll put it up there if it's done. But until then, just look at our channel and you'll find the actual discussion. I think that was it for this episode. It's a lot of stuff was covered. We want you guys to check out our Discord, of course, because we're going to post a lot about Enphase and put all the charts. I'm going to put the documents that I just showed you with my analysis and what I think Enphase stock price will go to. I'll put it all into the Discord. So please go check it out. Please join us. It's free to join the main part of the Discord. Check out our Patreon, see if you want to support us, and we hope you do. And we do have some merch. I'll include a link to everything actually below, and we'll see you on the next one. Thanks for joining us. Bye.